This is a big stage. All right, I didn't know they were going to play that. And I don't even know if they're aware that actually is the signature tune to the Dallas Cowboys cheerleaders. So I'm not going to do that either. But very much welcome everyone to Fitch's latest annual Outlook event. This is our flagship event. In recent years, we've been blessed, although I don't think blessed is really the right word, with a huge amount of issues to talk about. You know, we've had pandemics, we've had trade wars, we've had inflation and rate shocks, and we've had obviously a very changing and shifting geopolitical landscape. And that still is very much the case today. Many of those factors, so we'll be touching on them in some of the panels. But one of the things also that we've been talking around a lot with all of you and internally with ourselves is technology and what is going on in the technology space. And every year we do what we call a group leadership forum, where we take all the managers around the world from Fitch, 150 of them or so, get them to New York, and for 3 days we talk about matters that are resonating across the market and what themes that we should be focusing on. And this year in New York, we spent 3 days talking about technology and the disruptive impact of technology on business models and what it also means in the capital markets. And as you can see, we were so excited about it, we actually clapped at 2 times speed. But specifically, we were talking a lot about innovation and what does that mean? What does it mean for the market? What does it mean for companies that we rate? But also importantly, what does it mean for us and our role and how we serve all of you? Now, Fitch, I think, has a long, proud history of innovation. We go all the way back to 1913, John Knowles Fitch, when he established the company as is, all the way through this timeline where we get up here, particularly in the late 90s, early noughties. Innovation was very much a focus, a strategic focus for Fitch. It was one of the key ways of how we competed with the duopoly of S&P and Moody's. So we were the first agency to introduce things like pre-sale reports in structured finance, viability ratings in financial institutions, and so on and so forth. What you might not realize is that actually Fitch was the first agency in 1924 to develop the modern day rating scale. Didn't quite look like this back in 1924, but we thought this was a more interesting visual representation. And we actually ended up licensing this to S&P. This was how we used to distribute our ratings, a nice leather-bound book. Used to get sent out, I think, almost on a yearly basis, not quite the timely analysis that you're used to today. But of course, this is how very much we're focused at the moment. Web-based delivery platforms, these are all the portals that we have for not just Fitch Ratings, but for the various companies that we have in the group. And of course, more recently, we've been looking at AI and how we can empower search capabilities on these platforms to surface relevant content to you faster and quicker. So in the ratings context, we have an engine called Fitch Genie. But even this kind of delivery is becoming increasingly dated as users want their content digitized and delivered into their own workflow platforms, straight into their straight into their own systems, or hosted on third-party sites like Databricks and Snowflake, and come and get your content. And that's something that we're very much focused on as well. Interestingly, the original Fitch was sort of set up to help support the funding of the US transport network, in particular the railway bonds and the growth of the US railway infrastructure. Today, we're very much focused and participating in the growth of digital infrastructure, in particular data centers and their associated energy needs. Hopefully, that's where the parallels stop, since we ended up with a default rate nearly of 30% over here, and we certainly don't want to be seeing that over there. But I think data center growth and digital economies is something that we'll be talking about this morning. Obviously, private credit is a hot topic, and that private credit entities are very busy in that digital infrastructure space and energy space. But this visualization just shows you where we are seeing private credit. Private credit as such, as a concept, kind of doesn't really mean that much to us. We see private credit as a sponsor and investor across all our areas of business, and you can see this graphic represents that. And if you are interested in more information on private credit, in particular the performance of our private credit ratings, you can go to our website, where we have a whole microsite dedicated to this topic. I mentioned innovation. Recent innovation for us has been, over the last 5-10 years, has been a heavy focus on ESG. ESG, we started with a focus on what does ESG risk mean actually for the default risk and default probabilities of companies, how exposed are they to ESG type matters. We're the first agency to introduce ESG relevance scores, which is a direct assessment of how these issues hit the PD of companies. And of course, more recently as well, over the last few years, we've expanded into a specific ESG rating agency called Sustainable Fitch. And again, you'll find more materials, more information on this out in the hallway, but also it'll come up in some of the panels. And of course, as well as research and different new type of ratings and content, data is increasingly important. We're datafying pretty much all of the information that we have, whether it's from the traditional information we have in ratings, like surveillance data and loan level data in structured finance, or whether it's corporate financial data, adjusted ratios. But elsewhere in the group, we have a ton of leveraged finance data, covenant data, and loan pool data through companies like DV01, Credit Sites, and Bixby. Modern day Fitch looks like this, just a bit of a plug after all of that innovation and timeline. We're now up to over 1,600 analysts spread around the world, around about 5,500 employees across the group. And this is our geographic network. It's been pretty stable in recent years. Maybe the biggest, most recent addition to the network is Rehad, which is about, I think, probably about 7 or 8 years ago now. And our coverage has continued to expand. The modern day coverage really kick-started with Fitch inclusion in the Lehman fixed indices back in 2005. But we've been added to all the world's major indices now. And nearly all the world's major global investors have Fitch ratings in their guidelines, as indeed do the central banks. All of that, though, is being based on consistent focus on quality. And for quality for us really means about timely rating action, insightful, consistent, and transparent. And that's the kind of bedrock and the foundations that we always aspire to. And then finally, this is the modern day Fitch group. Not just ratings, a huge array of different products around the credit space and the data space. As I say, many of these companies are outside. And so if you're not familiar with Credit Sites, some of the products around DV01 and the political insight from GeoQuant and the country analysis on BMI, there's all various bits and pieces out there for you to indulge in. So on that note, I am going to move on to the next major session. Having said that, we've been focused on innovation throughout our corporate history. We're actually going to start this session how we started all the credit outlooks I've been involved in over the last 25 years, which is actually to focus and discuss the macroeconomic environment. And it's my pleasure to invite Brian Coulton onto the stage. Brian.